Thank you, everyone. Good morning, everyone. It's really nice to see all of these faces today. We really appreciate for you making this, for making it and coming to attend the WafeqNEXT event. We're very happy to see you over here. Okay, so let me start by introducing myself. As Nadeem just said, my name is Dima, and I'm leading the Customer Experience Department at Wafeq. Of course, I'm not here alone. Obviously, we're having all of the Wafeq also on-ground team joining me today in this event. Also, the founder himself, Nadeem, is also joining us in this event, and everyone will be happily assisting you throughout the event today, answering all of your questions. So please engage as much as you want, ask us as much as you want, and we'll be happily assisting you. All right, so I'm also very honored and proud to have two great minds joining us today into this event. Two great minds who are coming with a super exciting experience and I would say inspiring as well experience into this event. So let me start by introducing the CEO and co-founder of TaxStar, Mr. Rayhan Aleem. Rayhan, would you like to give us an introduction about your company, maybe a brief about your company as well?
Yeah. First of all, thank you very much for inviting me and hosting this amazing event. It's quite fresh that we have something where all the accountants can come to and mingle and learn from each other. My name is Rayhan. I'm the co-founder of TaxStar. We're a tax technology company, and we're looking here to automate and make tax computation easy for everyone. I also am a qualified accountant, so ACCA qualified for my sins. Born and raised in the UK, worked in industry and then set up my business out here back in 2016. And then I moved into tax technology straight after that, having seen the massive change and regulatory shift in the GCC. So thank you.
Thank you so much, Rayhan. Thank you so much. And also we're having Mr. Aunali Merchant joining us also into this event today. He's the associate partner at MMJS. Aunali, would you like to give us also an introduction about what you do at your company as well?
Sure. Thanks, Adima. And so first of all, Wafeq, is doing a brilliant job, with this, initiative. And I hope you have a lot of success on this particular initiative in the years to come. So at MMJS Consulting, we are a specialist tax firm with a strong GCC focus. We basically our vision is to provide a one-stop tax advisory and compliance solution for businesses that are operating across the GCC. So we are basically a happy-go-lucky bunch of tax guys who live and breathe tax. So everything from customs, excise, VAT, to corporate tax, to transfer pricing is something that we do.
Thank you so much. Thank you so much for the introduction. Okay, so let me start with you, Rayhan. The first question to you would be, with more taxes being introduced across the GCC, what role does tax technology play in helping accounting firms adapt and stay competitive?
So this is really an interesting question. And I think everyone can resonate here that over the last few years, the pace of change in regulation has been, massive. You've had VAT that came in, corporation tax, e-invoicing. If you're working in Saudi, you had e-invoicing in Saudi and VAT as well. Now, tax technology, the point of having tax technology is two things. Number one, it solves the problem of process. So you are doing the tax computations on behalf of your client, and you need a system that automates it for you. And number two, you have a team of accountants who you need to train and keep up to date with the changing laws that are happening all the time. And that's where a system can come in and kind of make that process easy for you. So as we start maturing as a region, you're going to see more and more need for firms, companies to move out of Excel, move out of Word, and be able to keep on top of these regulations and make sure you're accurate. And this is what tax technology can help, not just accounting firms, but also businesses as well.
I cannot agree more, to be honest. Thank you so much, Rayhan. The next question would be for you, Aunali. How do you think should companies structure their operations to remain tax efficient while maintaining compliance with the UAE's corporate tax laws?
So, from my perspective, how is the easy part, right? The more pertinent question to answer is why, right? So why would you want to restructure your business operations, right? Your business operations, you've been doing business in a particular manner for the past 30, 40, 50 years, as you know, as long as you've been in the UAE. Because of a corporate tax law coming in or a tax law coming in, suddenly things seem to be inefficient, right? You need to understand what drives your business first. What is the scale of your operations? What are your future plans? What do you plan to do over the next 5 years? Whether you want to remain local, whether you want to, expand to, multiple, countries for your business. And then you need to see how the tax laws affect your plans. So how they affect the way you do business right now, and how they would affect the way you plan to do business, maybe over a 5-year, maybe over a 10-year, horizon. And then you will see what are the benefits that are available, what are the efficiencies that you can bring into your business operations, and then implementing that particular thought process is the outcome. So that is how you actually restructure yourselves to be tax efficient and compliant at the same time. So essentially what I'm saying is that any structuring needs to be business driven. It should have a commercial rationale behind it. And if you do it in a particular manner, the tax laws are there to help you. But if your business demands that you need to do business in a particular way, then maybe tax is just an outcome, right? In any which ways, you need to be compliant with what the provisions of law are saying. If you are within the UAE, then merely the domestic tax law. But if your operations are spread across countries, you need to be mindful of the domestic tax laws in that particular country as well, including any tax treaties that are available between those two jurisdictions. Yeah.
100%. So Rayhan, speaking about the efficiency, a lot of people are talking about automations. What are the key considerations for accounting firms looking to automate and streamline their tax computation while maintaining accuracy and compliance?
This is a great question, and we're all accountants here, and we all know how to do a tax return, or we should know how to do a tax return, right? But I'm just going to highlight some of the key things that everyone should be thinking about when it comes to tax compliance. So first and foremost, you need to have a very good accounting system. Wafeq is a great accounting system. And you need to be able to, as Ayman mentioned, have streamlined processes to ensure that your transaction at the transaction level is accurate. I had a chat with Sanjay just before this, and when they are preparing their tax return and they're looking through the transactions, they can actually see there's inaccuracies or mispostings, and no one's picking up on that. So making sure you have an accounting system that's giving you the right data is important, and fixing those controls to ensure that that data is accurate is important. Because corporation tax is different to preparing your financial statements. When you prepare corporation tax, you're actually taking a snapshot of your accounting, your trial balance or your financial statements, and then you're making the transactions, the tax transactions after that. So being able to have a starting point is very important, and that goes back to your accounting software. And then having a system, or some people use spreadsheets, but we advocate a system to then record your tax adjustments is also important, because you need to keep your records for 7 years, for example. If the auditors come and they say, okay, give me your information in 7 days, and if it's all over the place in Dropbox or Google Sheets or, you know, random accounting systems, you're pulling my hair's already gone, but you're pulling your hair out to try to, you know, get all the information within a certain amount of time. So what we advocate is you have a separate system for your corporation tax calculation, and at any given moment, you need to get that information out. You can do that for any audits that will happen. So that's some of the things that I would advise from my experience and my point of view.
Well, you just like telling about how everyone like just panicked by the time that there is an auditor coming in. It just like brought me back, like a flashback to 10 years back when like an auditor was coming to the office, for example. Everyone was like standing on their feet, like, da, 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 let's get this, let's get that. So I remember like how hustle it was and how is now the technology is, I mean, helping the companies, automating, keeping it efficient, and as well as you keep it also compliant and more or less like accurate down the road, obviously. All right, so Aunali, what are some of the red flags or overlooked areas you frequently come across during corporate tax filing and assessment? I think you can relate to what I just said now.
Absolutely. We did the first compliance in December 2024. Then we did another round of compliance on 31st of March 2025. We just did some compliances this month. And I echo what Rayhan is saying, that there are a lot of inaccuracies that we've seen in the way information has been sent across to us for review, right? There are 3 or 4 key areas that I want to talk about. So the way the accounting is happening right now, right, and I know it was not a requirement before this, I note that, but there is not enough detailing in your chart of accounts, right? Mostly we've seen, non-deductible expenses hidden away somewhere in miscellaneous, expenses, right? Owners, shareholders, expenses, finding its way into the, books of accounts. Apart from that, there are certain provisions under the corporate tax law that, mainly, even now, a lot of finance functions have not fully understood, which is the interest limitation rule, or the qualifying group business restructuring relief that ought to be claimed, but since it is not accounted for appropriately, we cannot identify whether that is available or not, and also clear bifurcation or segmental accounting for the different business activities that a trade license could do. So you could have one entity that is primarily a trading company, but it is also a service entity, and it is selling goods and is providing after sales services for the goods sold. So there is no bifurcation, there is no segmentation between the business activities that which is very essential from a corporate tax perspective, right? And it becomes very important if you're claiming the free zone % tax relief as well, right? Also, there is a provision in law if you're a free zone person that you need to provide emirate-wise EBITDA and salary cost, right? So all of these are somewhere red flags that I would say, because as Habibi said, that in the daily mundane, if you are a human, you might miss something, and there is no materiality for tax, right? So even if you miss one fill of tax, the tax man is going to come after you, and he's going to demand that out of you. So being ready, having the correct software, as Rayhan mentioned, having the appropriate level of technology as well will help.
Thank you so much, Aunali. Question to you, Rayhan. In a rapidly evolving regulatory environment, what best practices can firms adopt to ensure their staff remains current with the latest tax rules and obligations?
Very, very important question, by the way. So what I can do is I can share what we do in my firm. And one thing you have to remember about the rules is it's constantly changing. And when it changes, sometimes you have no notice of it changing. And you have to kind of keep on top of all of these rules. And it can be, sometimes you have, difficult clients and they take up a lot of your time. Sometimes you might have processes that require lots of transactions, and now you've got tax on top to kind of keep on top of. Because if you get it wrong, the client's going to blame you anyway, right? Even if you're not the one who gets the email from the FTA. So firms need to be proactive from an education point of view. What we do is we do weekly learning sessions, half-an-hour learning sessions, and we ask each team member to present a topic on corporation tax. Why we to get them to present? Because it shows that they've understood and they can explain that topic. We record it and we keep it in our firm data bank, so then anyone who wants to review it can review it. We then have debriefs. So every time we have a new client or every time we have a specific issue with a client, every week we'll have a 15-minute discussion on what happened. So there might be something new that happened. For example, a client has interest on a loan and they've been treating it the wrong way from an accounting point of view or from a corporation tax point of view. We then discuss what happened and how we corrected that as well. So everyone knows what's going on in terms of what happened with one client, so we can cross-pollinate the education internally as well. I do webinars every 2 weeks, and we go do deep dives in these webinars in corporation tax. It's free, so you can join those webinars if you like as well. And the thing is, what we also do is we rely on other people who are also quite knowledgeable as a sounding board. So, for example, we actually work with MMJS we have clients in Saudi and the UAE. So there's a way to kind of mitigate your withholding tax, right? But it's quite a long process. We're not experts in that process. So we come to someone like MMJS who they have that depth of knowledge when it comes to corporation tax. And so where there's a roadblock in terms of what we can understand, what we can comprehend, we would then work with experts. And I encourage that, just because we're all accountants and we are so-called competing with each other. We're not actually competing, we're actually working together to grow our businesses, to learn, and to, become more profitable, more revenue-generating businesses.
It's a key to keep your customer updated about any new updates that is coming from the regulators and also your team internal, because I'm relating as well to what we're going through on a daily basis. We're having customers and clients that are asking us questions. So if our team are not up to date and they're not knowledgeable as much as, I would say, the regulator themselves, they will not be able to serve the customers and giving them the correct answer at the end of the day. So it's very important to keep everyone aligned and up to date 100%. And exactly what you're following, we're following also in Wafeq on a daily basis, on a weekly basis. We're hosting also a weekly webinars, like twice in a week, where we bring our customers or whoever would want to attend. It's also free of charge. Everyone can attend. You will find it also on our website. We discuss, we train, also we inform our clients about any new updates that's coming through. So that's a good opportunity for anyone who would like to join it. So Aunali, with regulators becoming more tech-driven, since that we're talking about regulations, what should businesses do today to future-proof their tax reporting systems and remain audit-ready?
The short answer to that is, adopt a technology. Because, again, as Rayhan is saying, and as, Habibi mentioned, right, there is only so much a human can do, right? And technology and AI, can reduce human effort so that you can concentrate on things that matter the most, that is business, right? But having said that, everybody knows that the regulator, the tax regulator in the UAE, the Federal Tax Authority, has been working at the back end, synergizing the different tax laws in the UAE. So we do know that at the back end, since FTA is the only tax regulator, and that is the way the government wanted it. Right, it is the regulator for excise, it is the regulator for VAT, it is the regulator for economic substance regulations. Now it is the regulator for corporate tax as well. Right, so at the back end, all of the information that businesses provide under each of the tax laws will be reconciled, and you can expect a high level of AI tech-driven approach from them. So to give you an example, we are seeing, an FTA auditor for economic substance regulations asking VAT-related questions, or we are seeing a VAT-related audit asking a direct tax-related question as well. So they are talking to each other, and you should have the appropriate level of technology in your business. Let it be an accounting software, let it be an information management system that works for you. So you need to assess this, the finance functions need to assess this correctly, appropriately, and as Rayhan said, rely on experts, right? Because you need to do the things that matters the most, concentrate on business, and ensure that you have a high level of reliability at the back end for the compliance.
So much, Aunali. Thank you so much. Last question to you, Rayhan. How do you see the relationship between corporate governance and the tax compliance evolving in the UAE, especially with the increasing emphasis on transparency and substance?
So, with corporation tax, you now have more data points with the FTA in terms of what they have. Right now, you're providing VAT information, ESR, although ESR stopped now, and corporation tax. And they're now getting more information. And one thing that's actually happened is, the tax return form for corporation tax is massive. There's like so many fields you have to fill in. And even when it comes to, the related party, you're entering the related party plus their TRN number, plus their business name, whether it's within scope of transfer pricing or not, and you have to make adjustments. So there's so much information they are now going to be disclosing to the FTA. And so it's very, very important that you have good controls in place to make sure that there's someone looking at it or reviewing it before it gets submitted. There's education, as we mentioned. It's not just about technology, it's also about education as well. We're all accounting firm owners, and we have, teams and clients, and no one here can, if you have a firm, review every single transaction or every single tax return form. And so you need to make sure you have these processes in place to ensure that it's accurate and you're giving the right information. Because again, if anything goes wrong, and let's say the client gave you the wrong information, they're still going to blame you, right? So you have to make sure that you are proactive from that point of view, and having these systems and processes in place is important. Obviously, I'm going to, say Wafeq, they're a good system. They have lots of different ways where you can review transactions. You can attach documents in there as well. And I re-emphasize, we're not all tax experts in every single domain. There are tax, rules around extractive businesses, around governments, around free zones is a massive, it's quite a big topic on its own. And so you do need to lean on experts which you may not be the expert, and it's fine. You don't need to be the experts of tax inside out, but you need to be working with people who are, who deal with the really nitty-gritty of tax day in, day out, so they can provide insights with you, and they will cover you in case you have that skill gap. So I would very much advise on that. And then you use the technology to streamline the whole process. So you've got good processes in place. You've got someone who your team you trust to produce the tax return. You want to make their life easy. You want to be able to take on more clients to do the tax return. And then when you have someone who you can rely on, who can help you with the blind spots that you may have, you'll have more of a robust system to then be able to when there's an audit, you're more prepared. You're not cancelling your weekend. You're able to then respond quickly, smoothly, and you'll have a nice, profitable, and stable and stressless business.
Rayhan, you need to excuse me for that because I've promised you that that was the last question. However, once you mentioned now the technology, I would want to build on that question. About the technology, speaking about the technology, how do you believe that technology will have a significant impact on the market, on accounting firms, and how do they operate in the next 5 years? That's one part of the question. The second part is how should we, as an accounting firm, prepare for that starting today?
So Ayman has mentioned a lot of, if you've been here in the beginning, Ayman mentioned a lot of the things that accounting firms need to do from a technology point of view. And I also resonate with what he mentioned about do small things every day, right? So when you make 1% gains every day, after a year, you're an AI firm already. The one thing I would say is AI is a massive disruptor in our space, and our clients will come to us and they'll say to us, why do I need to use an accounting system, or why do I need you? Why can't I just do it in AI? And what I would say to that is you need to be ready for that answer, and you need to start implementing certain processes within your firm to ensure that when they come to you and they say, I don't need to pay X amount, I can do it all in AI, you then have a response for that. And there's lots of little things that you can do. And Ayman mentioned it, but things like, you can use Gemini or ChatGPT to get your invoices and get it on an Excel sheet, for example, if that's what you want to do. You can use AI to have some of the laws of the information ready for you as a chatbot for your team, not necessarily to use that to advise your clients because you need experts for that, but at least you have a certain level of understanding of the law because it is quite deep. So for me, it's more about every week you want to think about what is out there, what can I implement. They can be very small. You don't need to completely change your whole system overnight. And once you do that, within 1 year, you're at the top of an AI-ready accounting firm, and that's what I would say you should be doing as well.
So much, Rayhan. Thank you so much.
Thank you so much.
Aleem. Thank you. I will keep it now for a couple of minutes. If anybody has any question that you would like to address it to our speakers. Any question?
So my question's to founders. So I've seen it time and time again, where the founders are sort of sold on technology, but a lot of the problems and the pushback comes from the employees. So what would your advice be to your founders to essentially sell whatever technology that they're bought into the rest of their business?
This is quite a deep question, and I could go on this, but I would say 2 things. First thing is your culture and your HR process. So what kind of culture do you have in your organization? Are they technology, do they embrace technology, or are they the 9-to-5 types that just, care about finishing at 5 o'clock and then going, right? So you need to work on your culture, in a culture where they're looking to learn. They know that if they learn these tools, it will help them in their next job or within the role that they have. So I think culture is very important. I think this is a HR topic, right? So I'm going to say the other thing that works for me is KPIs. So we have a target where they need to find 5% efficiencies every year. right, in what they do. And that 5% goes into their appraisal at the end of the year. So long as they're constantly finding these new applications, they're finding new processes and finding new ways to do things quicker and more accurately, then that helps them from that point of view. Yesterday I was with another firm, and I could see straight away that they just maintain their clients, and that's it. They're not looking to get more clients. They're not looking to grow the business. They're happy with their job. They're happy with their stable income, and that's it. I'm not saying that's a bad thing. I mean, that's fine, right? If there's nothing wrong with someone wanting a job and being stable, but you as a founder, you and your employee have to align on the goals. And if you do not align on the goals, no matter if you give them ChatGPT or if you give them a system that automates everything from bank rec to producing P&L, they're not going to adopt it. So that would be my view from that point of view.
Thank you so much, Rayhan. Just because the time is a little bit tight, and we know that few of us are in need for coffee in a bit. So I'm going to wrap up. Thank you so much. I would want to thank you, Rayhan, and also
thank you.
Aunali. I keep like mispronounce it, by the way. Excuse me for that. Thank you so much, and thank you so much for the audience here. We really appreciate it. And see you in a bit. Thank you.
Thank you, everybody.